Morning Trade Live. Let's take a closer look at Ford. The automaker reports earnings after the close today. Analysts are expecting adjusted EPS of 17 cents on revenue of more than $41 billion. This chart has been on a steady uptrend over the last year, as you can see here. The stock is up more than 45% in the last 12 months. We are up at 0.9% right now at $13.72. Let's go inside out on Ford and other auto stocks. Joining us now is Karl Brauer, who's the executive analyst at iSeeCars.com. Good morning to you, Karl. All right, Ford's up next, the next cab off the rank. Talk us through what you're expecting to hear from Ford.
Well, they've already given us on their huge $19.5 billion write-down related to their EV business. And that's obviously going to be a hit. But they've also had pretty strong commercial sales. Their SUVs continue to be their big profit margins. And now we're looking at a big shift in the regulatory world that's only going to increase their ability to maximize that area and sell those vehicles without having to buy credits, emissions credits from other companies or paying fines. So I think near to midterm, they're looking good. And I think they're going to be doing quite well. I think most of the domestics are very well positioned going forward. They're off a rough patch with these EV write-downs, but now they're going to be looking good for the next couple of years.
Yeah, it was interesting what we heard out of Stellantis earlier this week as well. I mean, looking at a business that is governed by demand, not command. Do you think the street is willing to look past the hit from this write-down as far as the EV business, depending on what they say about other things that they're doing? And what would those things likely be?
I think the street is going to realize that, again, we're talking future here, not past. We can look back and see how things go that well for these companies on the EV side. But a company like Ford, they have the best-selling vehicle almost for 50 years in the F-150. That's where they make the bulk of their money. That's where their profit is. And they're wide open now, at least for the foreseeable future, on producing and selling as many of those as possible at higher profit levels than they've ever sold. And at the same time, these companies aren't abandoning EVs. They're just really reorienting their level of investment and their time frame. Ford is committed to this low-cost EV platform. And, Jim Farley, their CEO, has been talking up how effective it's going to be, how he wants to be able to compete with China. Huge bar to set. China's got so many advantages. But if we see something like a really low-cost EV platform that can start to roll out, that sets them up for a term future as well.
Yeah, I mean, the Chinese have very much proven how they can do that at a cost advantage, and particularly with respect to what we're seeing in the competition in Europe. Just talk us through, how this stacks up against other companies that we're going to be hearing from this week as well. I mean, obviously, we've heard from Tesla, but Rivian is going to be out with its report card too. What's that likely to say?
Yeah. Is not going to have particularly good numbers this time around. We just know that the EV market share to about half of what it was a year ago. And these pure EV automakers, they're going to have to figure out how to survive in a world that, just as it's more friendly toward traditional automakers that sell bigger engines and gasoline powered vehicles, it's less friendly to pure EV producers. Now, they do have this smaller SUV on deck that's supposed to be coming. It's going to be more aggressively priced, their lowest priced vehicle yet. But I don't expect that to completely turn things around for them. I don't see them actually suddenly, having massive upside on revenue and profit with this vehicle. I feel like that electric market is still going to be fairly limited to, maybe on the upside 6% over the next year, 7%, and probably closer to 4 or 5% of the total market share.
Gotcha. Okay, good look at Rivian, a good look at Ford as we look ahead to this earnings. Thanks for the preview. We've got to wrap it up there. We've completely run out of time, Karl. Appreciate it. Karl Brauer, the executive analyst at iSeeCars.com. Let's trade it now with Tom White, her host of Fast Market. Hello to you, Tom. Okay, so we're looking at an example trade for Tesla. I know that the hope is that it's going to be a less of a bumpy ride for shareholders this year compared to last. What's the approach this morning?
Yeah, I don't think that's going to happen, Sam. This is just a volatile name. It's got a high beta. It reacts to, whether it's quarterly numbers, headline risks across the board, the upcoming SpaceX IPO. There's a lot here, and that's the way that it trades. I would just, kind of hedge everything and probably stay risk-defying going into example trades. But I went out In this example trade for Tesla, we're not to the March monthly option series. So you've got about 38 days to expiration. You got time for this to develop. If you're bullish on this name, we're going to see some positive headlines. You think it's going to go higher. This takes advantage of that. So in that March monthly option series, we're going to buy an unbalanced call butterfly that's bullish to the upside, where I'm going to buy one of the at the money or slightly in the money 420 strike calls. And then where you want the stock to go, we're going to sell 2 of the 460 strike calls and then wrap it all up by buying 1 of the 470 calls. So the construction of this trade is you're buying a bullish $40 wide call vertical and then offsetting some of the cost by selling a $10 wide call vertical. It lowers the input cost on this trade, and that lowers your risk. You're going to pay roughly, I've got a $12.70 debit on it. It's probably trading just over 13 bucks right now. Stock has moved a little bit higher, but the debit you pay is going to be your risk on this. So you're risking that $1,270. Now that can expand. You see here from the risk profile, you want it to go at or near 460. But even if it goes above the 470 level, it's still going to be more than a double in profitability. So while you're capping some of your gains, you're still giving yourself that upside exposure. If you pay that $12.70 debit, takes your break even to $432.70 to the upside over the next basically 5 weeks. That's only 2% above the current share price. So you don't need a big, massive rally to the upside. Just need some controlled movement to the upside. As I mentioned, the apex of profitability at or near that 460 strike, but anything above basically 433 is going to be profitability on this one. And as you move higher, this will start to expand in price on this bullish, unbalanced call butterfly.
Okay, got it. A good example trade for us for Tesla this morning as we are trading higher by almost 2%. One of the outperformers across the Mag 7 for us today as we look ahead to these forward earnings. Thanks so much for that, Tom White.